Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and we are recording here on Friday afternoon, June 30th. First half of the year is done. As always, I'm here with my partner, Barrie Hederachi. Barrie, are you ready to accept the fact that half the year is done?
I'm ready.
That means we
I'm
only
not
got
gonna fight
half
it.
left.
It's like fighting the tape. I'm not going to fight it. It's fine.
Yeah,
I'm in.
yeah.
Let's just go with it.
Yeah. So on today's show, we're gonna Barry's gonna cover the big five, which is ES, bonds, crude, gold, the copper, the dollar, and the euro. I am gonna cover NQs, and in the commodity space, we're gonna take a look at wheat, soybeans, cotton, coffee, and nat gas. As always, we're gonna start off with Bitcoin, and Bitcoin's just been going sideways, which, considering where it is bullish.
Right.
It's basically sitting on top of these highs,
Mm-hmm.
or right in the middle of these highs. So until we get below this full square, and the full square level there is right around 28,850. Unless we get below that, the bulls are in pretty good shape.
Plus, we broke out of that triangle kind of of
Yep.
the upper line. So
So it's bullish until proven otherwise, until price gets below these squares, like we use the squares as our reference points. By the way, any and all the levels are in a Google Doc spreadsheet, which we will post the link when we put the link up for the weekly video. So I mean, there's not much to say other than Bitcoin continues to be bullish, just based on the straight technicals. Any other insight you got on Bitcoin that you could add, Barry?
one thing is that the break to the upside, it's kind of significant because we've been basing for a while. So the bottom looks pretty good. And we always talk about how, long that we spend along the bottom, the bigger the move could be.
True.
And yeah, it's moving higher and can't really argue with that. Now, if you look at the bigger chart, like 21, 22, all those lows are right above here.
Mm-hmm.
Like 31,500. If you look above that, that's where all the sort of the lows are.
Been here.
Yeah.
Which is above this half square.
Yeah. What is, yeah, exactly. Right there.
Mm-hmm. Mm-hmm.
That's, I would drop a line there and watch that because and that half square is
it's 30, it's a 33 380.
33.
So just under 34,000.
Yeah, like 3,300 is 135 degrees up from the low for me. So, it's an area. So we guess still have a little ways to go.
Yeah.
We'll see. For now, yeah, if you're trading to the upside, great.
Exactly. Let me throw it over to you. I want to dive into the ES because I know ES is frustrating a lot of people right now. So let's see what the week is.
Let's take a look at that. All right.
Just grinding up, isn't it? I mean, it's not doing anything bearish.
It's not looking bearish, well, at this point, but all through here, we were watching the lows. It kept making higher lows and higher lows, and the trend wasn't clean and straight up, but it was grinding higher. So
yes, it was.
So let's see. This should be easy at this point, but somehow it's never is.
That's not the truth.
I wait for the day when I can just say, well, this is just a slam dunk. This is how it is. So we'll see. Now I just want to talk about this and move the square back and get rolling, because here and I think we looked at it a couple of weeks ago. This came up to about July 17th or so. We have 90 from that low. And we have a 90 degrees in price hovering above around 45.66. So this is a potential another target we can get drawn into. And this is our job. We like to look and see what's coming up ahead. So I drew that box there. We go back to the low where this all started. Man, I remember talking about in October how when these I know we had a lot of big cycles in there. And when that happens, we mentioned how it's like a seed and, we'll see how it sprouts. And I remember moving the mouse just like that. And here we are, that's just kind of how it works till it stops. So far, we cleared the 90. That was our last big marker that we were watching for. And it's in place right there. And we ran up. And last week, we left you with this 43.70 was the key number to watch. And I said, if we hold that 43.70, that is bullish. It's in a very strong position. And well, there is the low. It came there, bounced off. Well, that was technically by the book. It was easy. Because it didn't even get down to 43.25, which would have kind of gotten a little bit dirty, right?
For sure.
Dirty meaning a low like this, where it, bounces around a little while, a few days. But here, see, this is when the market is strong. Another sign would be you come to a really important level like this 43.70 here. You can see how it just came, boom, one day, next day, took off. Just couldn't stay there for that much longer. So for me, it looks good. Now we do have a 90 from this low coming up around that 45.66 number that we just talked about. And if you take it from the high, we really don't have anything of consequence, let's say, set up at this point. So we're pretty clean there. And coming off the low, really the next big point would be 46.60, which is really beyond the scope of next week. And the next thing I normally do is, I would look at the 72, see how we're tracking. Really not quite there. Look at the 60. Now that lines 120 from that low lines up very close to that
90.
That 90, which is right on 60, let's say 66. So this is about, let's say 38. It's in the neighborhood, close enough.
Yeah. So
we'll just leave it at that. Let's put this back to 90. Another thing we could do is hit the 45. Does that look too busy or is that okay?
No, that's fine.
All
you
right.
can see we're stretching now to try to get over that half square.
Exactly. Yeah, that's exactly what's happening. So for now, there's not much, only thing when we have a nice run like this for the entire week, it's a good place to take some profits and bank some profits off of those longs. Otherwise, if we settle above this, and the reason I say that is we have a potential for a false breakup here. We had a high on the 16th and we could easily, take that out and not follow through. That would give us a false break. So you always have to be alert for those.
And guess what? Today's the end of the quarter and a rebel yell cycle date.
Well,
so throw that into the mix as well.
To be noted, I should mark those your rebel yell cycles on this so we can see clearly. Anyway, the reason for false breaks, we talk about this a lot. You can see we had one up here, we had one here, had one here between these two.
That was a good one. Yep.
Had one here. So it's not uncommon. And when they set up, I think it's really important to watch it. So we are cautiously, we were bullish last week. We said, especially if it held above 43.70, market's in a very strong position. Generally speaking, strong position anyway, about this 43.04 number that we were watching for a while and that we broke through right there. So for next week, barring that we can't hold above this 44.80, which is a 50% line, meaning if we don't hold above it, especially if we don't close above it today, and we close below that, we could set up for a potential false break. And that you really should watch for today's low, which was 44.33. So if we take that out sometime in first couple of days, well, it'd be the third day, wouldn't it? It'd be the 6th when we're open again. So we have a couple of days in there. If we take that out, then I would look that to be negative. Otherwise we're okay. At least up until we get up into this 45.66, 45.70, up into this box. I'll leave it there so we kind of see what's happening. And what's interesting is I draw these trend lines and they're not always in play, but then sometimes they are. And you can see that trend line's also coming right up into that box. And so often that's a good way to track things, at least to give you an idea of geometry and where things might be headed, sort of like a magnet, you know. Just like how, like a magnet, it pulled it up to this spot. It's similar. Let's take a look at the weekly. Looking strong, looking good. None of that daily 4-hour nonsense.
No. Yeah, we were working on 2 inside bars, but boy, it popped right up, took out the high.
Yeah, well, last week we did take out the prior week's low, which was a really good fake out, right? And when a fake like that fails, you really want to be, you know, on your toes, because, you know, it could really swing the other way. And we are, bases the weekly chart, not much overhead. We know we're looking pretty good. And so we'll let daily chart be our guide. There we go. We'll use that steeper line just to kind of watch how this all works out in time. Anything you want to add to that?
No, just that, you know, I was looking at the daily, which was, you know, potential bearish setup that's now been invalidated because we just took out the highs. We got over the full square I had there, you know, around the full square was around like 44. And we pushed through that today. So it's bullish right now.
Right. And you know, my thing, you know, when something's really bullish, you really want to be paying attention to that. Especially when you feel like, oh, he can't fail. You know? Right. Like, I mean, going all the way. So
the key thing is, you know, if it's going to be bearish, it has to make lower highs and lower lows, and it's just not doing that yet.
Yeah, you mean start a new trend.
To start a new trend. Yep.
Yeah. But you can see this this line coming up in July. You know, over here it's let's say July 12th, right? 12th, 1790 from there. But if you look at it, we do have a lot of interesting time cycles expiring right in that range, you know, that first 10 days or so. We have 540, we have 450, 315, 78, 144, 270.
Yeah, right? And I had a bigger cycle that had like a late July, early August high. So it's right in there. I mean, you know, plus or minus a week in here is not a big deal when you're looking at bigger cycles.
Right. But we do have some, you know, coming up in here degree wise anyway. So we'll watch those. And we really want some price levels to confirm. So we'll wait and see how that all works out.
Exactly.
But I think going for next week, I don't have a lot of levels other than to see, and it's going to be a very short week. So what we want to really watch for is this, let's say 44, let's call it 44.75. And we want to kind of hold above that one way or the other. So let me add that number here. There we go. We have that for record.
That's your support. That's your major support for next week.
Well, this is my sort of the trap to catch the false break. You know, if we can't hold above that, let's say towards the close today, or, you know, maybe that during the half day or on Monday or on Wednesday, we want to watch this number to see, you know, can we hold above it? Even if we pull back a little bit, can we get on top of it as fast as possible? And that's the value of these squares. We want to see, you know, if it can take them out. Like here, you know, once it took it out, the fact that we didn't even get close to that means it's very strong. And that tells me, well, I think we have enough to get up to this 45, you know, 60, 70 areas. That's another reason. So the next step to watch would be this 45.75, just to see, you know, just to see how the momentum's keeping up. And if we can't get through there, we start, you know, sort of getting weak, then we know that false break potential is there. It could be activated.
Sure.
I think that's a good way to summarize it.
It's a good plan. Yeah.
And also to remember these trend lines. I mean, these lines are fine, but, you know, we are adding into a very steep line, and we know steep lines like this really can't last that long.
It requires ever increasing momentum.
ever increasing momentum. And it kind of reminds me a little bit about this, sort of like this one. It's not as steep, but it's steep enough. So we're going to have to watch. We're watching that. So watch that trend line. Like the confirmation that you say, start making lower lows and lower highs. Well, it would have to break this fairly soon.
Trend line. Yep.
Yeah. I mean, as soon as it breaks that, then we know, we do have some other cycles in there. So we want some confirmation. So we'll take it like that. Yeah. Let's move on to bonds.
Got to break out of that triangle.
Yep, exactly. So last week we talked about, hey, this triangle here between the 50% line and the lower equilibrium line is compressing, and that we ought to break, either from the 50% the upside or the downside. And we've been looking for weaker bond prices. So I said, eventually we're going to have to break to the downside at some point. So this looks fairly clean, and maybe we'll go up and get a kiss to the line and then roll over. We'll see what happens. What we want to see is to make sure that the sideways is over, and we're ready to move in some direction. But here it's too early to tell. But we know that line that was really, was kind of stepping up for days and days, finally slipped off. So we know the pressure wasn't for a break to the upside. That's clear.
And that's an important point, Barry, too, because if a lot of times when we look at triangles, you and I talk about how odds do slightly favor the direction of the overall trend. And here the swing was down. So the odds, and you were mentioning that, it was still bearish overall in the bigger picture.
Yeah. Yeah. When we get to the weekly, it'll be very clear. But you can see how we're just kind of meandering, between these 1/3 lines. Or the 2/4 lines, basically we're covering half a square, but the middle, right? So that there's 2 quarters on the upside, the bottom. So it's just really good fourth wave-ish kind of sideways where nobody's able to hold the trend unless
nobody's happy and nobody's making money.
Yeah, unless you're very quick on the trades.
That's correct.
Let's move on to the weekly. So here's the big trend. I mean, we don't spend enough time with bonds every week anyway, but let's just quickly take a look at it. So we've been coming down since 2020. It's been a while. We can't say this is sort of a quick bear market, right? We've been heading down for almost 140 weeks. So that's a long time, almost 144 weeks. So that's quite a long time. And then we got into this expanding triangle sort of a move. And we're not looking at anything other than, the short term. But, I can't pass up a potential ABCD. So let me draw this in here. So that would get us to the bottom of that expanding triangle. I hope you guys can see that. So this is what that's kind of what I'm seeing at this point. Not much more than that. Key is to see if this trend line can be taken out next. Right there, which, we're right there. And if that happens, there's a very good high probability that we'll go back and there's a lower boundary of that. And that will be around 120. And from 120 to 114, not that far, Ben.
Nope.
We can get there in a hurry. That's going to be the big decision center, I'll tell you that. It's not up in here.
Agreed.
Because you can see how, that level has all kinds of price action going all the way back to 2000. So it's
144 off the high. I mean, it's just all kinds of important.
Exactly. There. So I think that's where the big decision is going to be made. Up in here, I think we're just sort of killing off time. For now, let's move on to crude. I even took the square out because, who needs squares when the price is not moving more than $5? We'll add those later.
It's a lot like cotton, man. It's just perfectly sideways.
Yeah. Oh, I forgot about that wheel. Just saw that.
It's a good one.
I guess that was a hidden one. Anyway, let me delete that. What can I say? What do you have? Do you have any comments there to get started there, Ben?
Just that
you can stay awake.
It's a boring market, but you want to watch boring markets because what comes after the dullness and the boring part is chaos.
Mm-hmm.
And it's just a matter of when it's coming.
Yeah. And here it's really, I mean, I wanted to take the square out just so that we can see sort of what's happening here.
Mm-hmm.
The 73.50 that we've had here probably for a year, couple of years.
Long time.
Time. That's been, that really ended up being sort of a key level, because all through here last year, towards the end of the year, we held above that, and that worked out really great. And then we had this sort of the false break down into 64.75, which we had lined up, ran back up to 83, which was our upper boundary. So this is almost like oversold, overbought, and here's our zero line. It's almost like an indicator running through. And now we're stuck at the bottom part of it and really not giving any indication of trend, especially, and you can tell that by the triangle here. And we looked, last week we said, well, it's going to compress into this for a couple of weeks, and then obviously it's going to need to break out. The question is, is it going to break out into a trend, or is it going to just break out and just continue to go sideways? Well, we'll look at that. We'll visit that next week. It'll be a short week, so we'll have 3 days of price action to talk about. And I think adding 3 bars to this is not going to be that much unless we break out, early part of the week, and we can go up and test this 73.50. Or we come back down to the lower part of the box. So I moved the box to in here. This is where the price action is. I mean, anything other than day trading this, I'm really not sure if it's worth any risk here. Just sideways. So we'll leave it at that. Let's look at the weekly.
Same story.
Same story.
Winding up.
We'll get to some of these times soon. I just can't wait. I'm like,
yep.
Getting trigger happy here. But I think it's coming. It's not that far.
I don't disagree.
Oil can only go do this for so long. And if you look in history, after a few months, oil normally tends to, move on its own. So we'll see how that works out. So for now, not much, guys. It's pretty much the same. We're just stuck in this range. And
we just got to wait till it shows its hand and then trade it once it does.
Yeah. Up until then, nothing's actionable in here.
It's just Chop City.
Yeah. Let's move on to gold.
This one's interesting. I got kind of interested in looking at that today when I was doing my review.
Right. So the highs came in. I thought, if we held the 90, that would have been really good. We had this little box drawn in. If it was in here, if it could have held in here, it would have been good. And if you guys follow, as soon as we had this break here, we knew, the upside thing was done. Well, that first indicator was breaking this trend line, right? And then we just couldn't keep up to that side. Came down to 1940, tried again, couldn't get above, looking weak. So we took out 1940. So next up is really this 1887 area. We might go back up and try to tap 1940, but you can see now all of a sudden we have all this overhead at 1940. So, and we have this trend line, momentum's kind of rolling over. So we'll just have to give gold a little bit more time. I don't think it's quite ready yet. So here's
that's why I'm interested.
That's why you're
well, on the daily, I got a 45 by 45. High to low.
Calendar days, maybe.
Maybe.
Like so here, the 45 by 45 would come into July 6th. Well, next week, not
Monday. Yeah. Or not Monday. Sorry. Next week. Yeah.
Next week. So
but as you can see, there's a couple days that are open because we had days off. So it actually slides over and does give you your 45 by 45.
Right there, right? Yeah. 29.
There's one there, and then there's one
over here.
One there. Yeah.
That's funny.
So
like you're so picky about that. And I'm like, hey, yeah, leave it in there.
Yeah. It's tight, but it's close.
It's close. Yeah. It gets you there.
Mm-hmm.
And the 45 is, yeah, sure. Let's see what happens. I mean, that's really, just to take a minute on the educational side, that's really a good way to test this. It's a good test of which way the market could shift, because if it holds that 45 and we take out 1940, then there's a really good chance we're going to go back up at 90 and retest that, And if that 40 goes, which is right there, then we know 1887 might not even hold. We might go down to test this really the big area down at 1814.
Correct.
So I think that low, no matter what, is really important. Regardless, we're in a kind of a downtrend. We'll see. 45 days is a good, not a bad time to finish up these things. So, and that's next week. So it's possible that we go up for a couple of days and
especially if it's a corrective too, Barry. If it's just correcting that move up and we do a 45, it's possible.
Perfect. If we do that, that'd be like a really early sign of
strength.
The lows in place, and we can just start moving again. And but gold's a little tricky, so let's wait and see how that pans out. ABCD, of course, goes way down to here. We'll see. I'm not sure if we get that 45 by 45 from the high, then at least within the ballpark, we're in good shape. Then we can say that might have finished a few things, like you were saying. Let's look at the weekly. Weekly is back in the box. 1919 was a weekly level, and we just managed to open and close above that for the week. 1881 is down here, the lower boundary of it. And I'll just extend the box. We can kind of watch the price action here. So like I've been saying, anything above 1881 is fine. It'd be more like a corrective move than a new bear market in gold. So, but long as it's above 1881, it's in fairly good shape for the long run. Let's move on to copper. So looking at copper, we once we broke above the 50% of the square, we had a good run. We were kind of looking for some kind of a correction, and if it held above the 50%, it would have been stronger. If it got under, we would make a higher low, which would be fine. And still, the major support was around this 350, 54 area. Now that we have a reversal, we can draw a trend line and see if we can hold that and somehow grind through. And it looks good. If the copper's looking positive on the shorter time frames, I think long as the high of the low is held, you can probably start trading to the upside.
I agree with you.
Yeah.
It looks like it's trying to put in another higher low.
Right. So you don't want to ignore that. And so like I said, it all depends on the high of the low bar. We'll watch that. So after we tapped this last week, we broke down off the triangle after we went back and tapped it from below. And if this is all we had to do, just one bar, and next week we take out this week's high, I think that's very, very positive. And we might be done with all of this. But if we can't take out this week's high, then we might be having, I don't know, maybe because it's a short week, we might have an inside bar, or just kind of maybe just consolidate a little bit. But far as the bigger weekly picture goes, it's positive. We're holding the fork, we're holding the trend, momentum's okay. We're holding above the 90, and we did have a little bit of a messy correction in here. So let's see how we get out of that, get back into business.
Agreed.
And let's go to the dollar. Well, we held the trend line that we had in last week, and we started moving higher. We did pretty well. We got about the third of the square. So I think the dollar is doing okay. I wouldn't complain about this, mainly because if you look at the price action, week over week, it's been very constructive. We made after these lows, we did a false break, and that was a move coming off the false break. So unless we go back down and take out this trend line, I think it's probably building up some value in this area. And we want to be above, ideally about this 102.5 or so, 102.75. We can stay above that green line. It's very strong. So that means if we can hold today's low, that's very good. Even if it comes down a little bit, even above 102.25 or so, it should be okay. Any concern for the dollar would be if we take out this trend line at this point. Wouldn't you say?
That would be trouble.
Yeah, that would be trouble.
Because right now you got the structure of, okay, we had a false break at the low, you got a series of higher lows. So
Yeah.
If it can build off of that, you got something going.
Exactly. So we'll see how that works out. Let's take a look at the weekly. So weekly chart, the good news is we made new highs and didn't blast through, but it's okay. We're making higher and higher. So we'll have to see how that works out. So far, not a whole lot of trend going on. The only reason that we have been bullish is because of the square and the fact that we're holding above the 90, which is very positive. So let's just follow through and see how that goes. We are doing a triangle on the weekly, by the way.
I was going to say bigger picture. It's looking like just another triangle.
Yeah, we have a triangle forming in here. So we want to keep an eye on that because there's two ways it can go. Obviously, it's either going to break to the downside, which would be really bad for the dollar, or it could break to the upside and retest and move, which I think is probably the path. So we'll watch that square in the bigger picture.
It'd be really devilish, a little false break to the downside, tap your 90 and then go.
Then, oh yeah, that would really be. Yep. I mean, it does all kinds of, false breaks, right?
Yeah.
And yeah, so we talked about triangles a little bit last week, so we won't have to talk too much about that.
And we're seeing them everywhere.
Yeah. Yeah.
All kinds of markets.
So Euro, not much different from last week. We had resistance up here at the square, the 144 level. And we have support at the 108 level. And once we take out the 108, I think that's when it's going to start picking up some momentum. So in here is probably more of a consolidation. And we're going to treat it as such. So 110 to the upside. Well, 110 will be way up here. Yeah, let's give it till 110. But if you really want to be picky with the square, say 109.75 would be resistance and support would be around 108. In here, not much to do, but if we take out 108, I think we can probably have some momentum to the downside. Upside, not much till we can really settle above this 109.75 level. And we haven't quite done that, so we'll leave it at that. Looking at the weekly euro, pretty much the same case.
Same story.
We this week we took out the low of the high bar.
Correct.
So that's something. There was some weakness coming in. We didn't take out the high. Therefore, we have to go with some kind of a lower high here, which is what we normally talk about. So a lower high on the weekly. And if we get weak next week, like we said on the daily bar, if we see some of those lows getting taken out or markets start to get a little bit weak, and I think that could start the next lower, next leg down. What we have in place is we have a lower high, and this week we took out the low of the high bar, so which means the high could be in place. So we really want to watch this high just to see if we're going to spend more time up here, and we want to watch this week's low. So if we take out this week's low, I would expect lower prices to follow, just because we have the lower high in place, and we know this high came in pretty well. Sure. Anything you want to add there, Ben?
No. It's good. It shows how that, reading those bars gives you such a big clue for what's coming. It's unbelievable.
Yeah. You got to look at the bars. So that's all I got for the euro, and my segment's over. I know we have a lot of commodities to cover, so let me put it back to you.
That was good coverage, Barrie.
Thanks. So we have a lower high. Is that what we have to deal with here, Ben?
Yeah, I mean, and you and I were talking about this. While the S&P made a marginal new high, NASDAQ and the Dow didn't get close.
Yeah.
So, that whole scenario you were discussing of a potential false break certainly is on the table. We got to see how things play out next week. But the story here in the NASDAQ was this half square. We said when we cleared it last week, we said, okay, on any pullbacks, we want to stay on top of it. Well, we pushed hard for 2 days, but couldn't stay below it. So this continues to be bullish, even though we're on the watch because we now have this lower high. The other thing to notice on the chart is, from the low, you can see these steepening trend lines showing momentum kicking in. And as Barrie was discussing when he was reviewing, ES or one of the other big 5 he covers, when these trend lines get steep, they get hard to hold. and NASDAQ couldn't do it this week. The NQs pulled back, and now it's just kind of struggling to try and get back up on top of that, because it needs ever increasing momentum to keep that rate of change going at the same speed.
Right.
So the key level is this half square, which is around 14,950. If we lose that, then there's some issues here, and we have to sort of begin gathering evidence. Okay, how bad is the pullback going to be? Because we would have a lower high, and then presumably if we take this out, this half square out, we'd also have a lower low.
Right.
So it's not down, it's not out, but it's a little woozy. That's what I would say the status of NASDAQ is. It's walking a little swagger right now, So we'll have to see how price action plays out next week. What stands out to you on the NQs?
Well, one thing is, when the markets are running, you just want to go with it. We wait for trend. So when we get trend, we want to go with it. But we also want to keep one eye on, on the horizon.
Mm-hmm.
And so that's what we're doing here. I think watch the trend lines and watch how the price action unfolds. So far it's okay. We'll see how it turns out next week. Just watch the price action, and we have a potential for a false break here. So we'll watch that too.
Mm-hmm.
Outside of that, I think anything above that 50% of the square, we're in good shape.
Agreed.
Yeah.
That's the key line.
Mm-hmm.
14,955.
That's it.
All right, so let's jump over to commodities. There was a lot of action in commodities this week, and the reason I can say that is if you look at our Google Doc spreadsheet with the price levels and the important levels for each market that we post, I put a date on there for when the last change in the levels happened, and there was a lot of activity this week.
Mm-hmm.
In those markets. I think about 7-8 different markets changed this week, including every one of the grains. So let's jump in. Let's look at the grains, and let's see what's going on there. First one is wheat.
Mm-hmm.
Last week when we covered all three of the grains, we covered wheat, corn, and soybeans. We said they've all had great runs. Don't be surprised if we get a pullback. Right. Well, be careful what you wish for, because there it is. A pretty steep pullback. But in my view right now, it continues to be bullish. While we didn't close above the half square, which would have been nice, which would have been a little more bullish. If you look left, that's pretty much perfect structure. All right, we pulled back to the previous highs. Which were, around that 646, 647 area. So the key thing with this market now is we wait and we watch and we look to see, do we get a reversal that gives us a higher low? That's the main question with this market we need to have answered. And hopefully this coming week we'll get that answer. The half square is a good sort of demarcation line for you to watch. We don't want to get stuck under that, because if we get stuck under it, there's chances are we're going to take this low out, whether convincingly or in a false break fashion. But if we can sort of hang around here or sit on top of this half square, then we have higher confidence that we're going to be able to put in that higher low and maybe even get a setup to get involved if we're not already in this market. So wheat to me continues to look bullish. The big question to answer is, where is this next low coming in, and is it going to give us a higher low? What's the question for you on wheat right now, Barrie?
Well, it really is where it's going to stop. I think that upper channel line is a good spot to watch. It's fairly clear, right? And usually pretty bullish if it can come up and stop exactly there. Mm-hmm. So that would be one. And other than that, I think your quarter square from the low up, that area is really good.
Right here.
Right there.
Yep.
616. Yep.
Mm-hmm.
So we'll see. I don't think there's a big rush to catch this low, but I think we want to watch the reversal off of that, because I think the low that came in May is solid. So
that's a solid low.
It looks very solid. So let's just be patient and, catch it on the flip side.
Patience is absolutely what we need here.
Mm-hmm.
All right, let's jump over and look at another one that had a really good week too. So soybeans is doing what we want to see from either wheat, corn, or soybeans, because we triangulated the low, had a good strong push up, hit the trend line, hit the half square, reversed, and then look at the price action here off of this higher low. So here we now have, this is a confirmed higher low, right? Because we took out the high of that low bar. So now what we want to see is we want to come up and we want to take out this trend line, take out this half square, take out this high here, and we could be off to the races in beans. But this is the kind of action you want to see. You get that first push up, you get a sharp, scary pullback, and then you can see strong interest come back into this market when it reverses. And I don't know what the news was today, but there clearly was something in there because all the grains moved. But the news was obviously interpreted as bullish for beans. So for beans, to me, the key level is on any pullbacks is this full square in the 1395 area. As long as we hold that, things look bullish. And then to the upside, we want to take out this half square, which is around 1485. So that's my view on beans. I think they look good. I think the price action off of this higher low was bullish and what we wanted to see. Anything give you caution about beans at this point, Barrie?
Nope.
That's good.
I think long as we can hold above like 14, let's say, that's I think we're pretty good. We might be clear all the way to test the highs there around 15, 60. Matter of fact, if we do an ABCD off that low, it ends up right about at your that's full square.
Is that right?
Yeah, try that real quick and see.
Hold on.
And to me, if we go here, that's a reasonable target.
All right, let's see what that ABCD would look like. Yep.
Right there. So
yeah, this market looks good.
Yeah. See. Well, it's good above 14, about this key level, like 14, 16. Long as we can hang above that, it's okay. Otherwise, we'll have to take another look.
Yeah. And even if it just messes around and futzes around here, but still confirms that higher low, we're still in good shape.
Yeah.
You got to, as Barrie was saying with wheat, you got to be patient. I wanted to take a quick look at corn for educational purposes. It's not ready yet, but I want to show, what can happen, right? We triangulated this low. If you go back and you look at the last few months worth of shows, we've been talking about corn. It's been sort of leading the grains. It made this false break low, had a strong push up, was holding above this full square, and then this week happened. This happens, right? This is why there's no certainty in this game, right? This low looked great. Everything was in place and lined up, but sometimes it doesn't work.
Right.
And you just have to know, where do you call no joy? Where do you get out? If you were playing this thing to the upside and you had a tight trend line on it, that was your warning sign right there, this back test, right? So this is why you use trend lines. This is why you use squares, because this can happen. And so now what we're trying to do is watch this low here, because it doesn't change the fact of how we got here, right? We've been doing this since a year ago, April.
Yeah.
So it's most likely not the start of a new down move. It's most likely some sort of washout low move. So this market, if it's not ready, but this was a market where we want to watch and we want to see, can we get above this full square and sit on top of it? Can we now work off of this low, or are we going to continue, get stuck under here and continue lower still? We don't have the answer to that yet, but the market will tell us. I know you have some thoughts about corn too, Barrie. What do you see when you look at the chart here?
Well, I think, well, the first thing I noticed was we're doing a false break at the low in September of 2021.
Right over here. Yep.
Right there. So that's really important, especially if you flip around here. Otherwise, I think we have a little bit more work to do. Let's finish it up. But these moves are, they look like the ones that really shake out the weak hands and flush before a bigger move starts. Now, from that high in the June high down in, I have really good support around 460. So that's the other level I'm watching. If we go lower 460, we should really hold it.
Right,
and if it doesn't, we'll just wait longer. It doesn't matter. But I'm not ready to, we don't have to catch any corners. We just have to see where it's going to come in and then get on board.
Exactly.
And I don't know if this is the best time to be shorting the grains and commodities, so I'm not really playing the short side. So we'll just wait to see.
Right, because the bigger time frames just don't support that.
Right.
So, all right, let's go check out the softs. There's some interesting developments in the softs. This is a boring market that everybody's probably sick of me talking about, but the reason I'm talking about it, and I'll show you why, what can possibly happen, and why I'm bringing it up again this week, is we had this false break low, and then we moved into this channel that we've been doing since last November. So we're going on an 8-month channel here. But look at what's happening in this channel. Low, higher low, higher low. This last higher low at the end of this week really intrigued me because I saw all this going on for the last few weeks and I said, man, this thing is just dead. And then out of nowhere yesterday, big up bar, close at the high. Today, big up bar, close at the high. And we held this full square. Whereas last time we actually had, decent price action underneath it for 2 days. Couldn't get under it at all in 3 days. So this next higher low has me on alert that if we can get up into this 83, 84 range, we don't even need to get to the top of this thing. And this thing, the momentum could kick in on this market and buying could come in. We'll see. The price has to show me. It's not anything I'm going to anticipate or predict. But I think if we do get the price action up in this area, we could see an acceleration in the trend here. It's going sideways like crude oil that Barrie covered. Barrie, what are the similarities you see with the crude chart you're watching like a hawk here with cotton?
All kinds of sideways after a significant high. We'll see how all that works out. But for cotton, I'll tell you what, this 82 level is the key level I'm watching. If we can settle above that this time around, we could get some traction.
Yeah,
because because the lows look good. The March lows look good. Came in with a couple of other cycles. And since we held a little higher here in June, we have another shot. Let's see. I'm not going to get involved till we get above 82. So we'll watch that.
Agreed. We got to push a little bit higher to sort of trigger, I think, the momentum guys piling in.
Exactly.
But let's see. All right, let me show you the other market that I think is a decent parallel to this cotton market and possibly a preview of what's going to happen. We've been on this cocoa market for a long time. If you don't believe me, go back and look at our YouTube page and go look at the old videos. Just do a search for cocoa and you'll see all the videos where cocoa is mentioned. We started talking about this thing in October and November as we had this spike low, then a move up, then a higher low and a higher high. This is how it starts. And then this is what happened. So, and I want to give you the perspective of how much sideways this thing was doing. Look at the weekly. That's since 2019, 2020.
Right.
Look at the monthly. Since 2017, 2018. But once they get going, that huge base serves as like a trampoline to move prices. Now we're getting in the range of highs, right? We're coming up on full square here at 34 let's just say call it 3,400, 3,420. So it's not like you want to chase it up here, but this is the kind of move that comes when this thing breaks out of these major consolidations, which cotton is doing. So that's one. Hopefully, this is a preview of what we're going to see in cotton. All right, let's look at the last soft. I want to show you something, what's going on with another old friend of ours, and that's coffee. So coffee completed an ABCD this week. And what we're watching, much like we're doing with the grains, right? We had a low come in, very good low in January, had a strong push up, and now here's your first pullback leg on a daily basis.
Right.
Are we going to get a higher low? That's what I'm watching closely to see. What we need is a daily reversal, ideally that clears this full square around 167, 168. If we get that, it means the ABCD was good. We reversed back up, and we could be potentially catching a decent move higher. Possibly a third wave, or let's say it just does an ABCD, right? Where does that take us? If we get the low right in here, not a bad trade. Yeah. It would be right back into the middle of this whole structure, which it take some time to get through that. So it makes sense. I know you've been tracking coffee with me. What do you think here with coffee?
I think we have a little lower to go. 154 is my next support level that I have.
That would be right around there.
Yeah. So now if we can't hold there, boy, then I think we're going to go for a false break or lower pricing. So I think 154 for me is sort of the make or break point. So let's see if we can hold above that.
Yeah.
Now this is for a corner. We're looking at corners here, and coffee does 60 days, multiples of 30s all the time, and we have 60 days from the high in April, come July 11th or so.
Which is not far away.
Which is not far away, and that's in time. And we have 60 degrees down around 146. So, 11 around 146 would set up for a potential low. So we'll watch that.
Yeah, and your 60 is right, because right here we've done basically 45 by 54 so far.
Mm-hmm.
So we'll see. The keys for me is we can't get stuck under this full square, because then the pressure is going to push it down to test that low.
Right.
So we got to reverse and get above this full square in fairly quick order to avoid that fate. So we'll watch it. We'll watch it and see if we get that set up for a fast move. All right, the last one we want to cover. Barrie looks at the analytics on the video, and a lot of people have shown an interest in the nat gas segment. So we're going to try and keep nat gas on the show as long as everything's looking favorable and actionable there. Mm-hmm. So let's talk about nat gas. So nat gas is again acting well. This is one we triangulated the low here, sort of watched it come into this corner, and now we've been seeing a series of higher highs and higher lows, which, as you know, means that things are starting to turn from when we were doing lower highs and lower lows on the way in here. The other thing that's really interesting is the momentum seems to be building. Here it was a fairly flat, not a lot of momentum. Then we steepened a little bit, and this last leg, we're starting to steepen more. So one of two things are going to happen. Either it's going to have to break this trend line and just going to chop around here, or we're going to see an acceleration higher. The key level is this 282. We need a close over 282, which would be bullish on a daily basis. We need to take out this high and this high, and then we can be off to the races and sort of challenge this half square at 340. And then once we break the downtrend line in the half square, we're looking at $4. I also wanted to show you something important that we saw happen on the weekly. Since February, this is the first close over this half square on a weekly basis, which is big. So if next week's bar can stay on top of this, we'll have cleared this half square for the first time in a long time, since 2021. So this is a big level that we closed above on a weekly basis. Now it's just a matter of, do we get that buying momentum kicking in as we're starting to see this thing turn up on a daily basis, and can we sort of get lift off speed, so to speak? Odds are starting to stack up, Barrie, and that's why I continue to like natural gas and think, there's higher prices coming, because the moment of the buyers piling in this is getting closer and closer. What are you seeing when you look at this chart?
I agree. I think the lows came in pretty well. All the cycles lined up. February low was okay. April low was okay. And those were in place. We're making higher lows. And we finally got through this 265 area. Which is what I was looking for last week. And we gapped open, actually, right? On
Sunday, yeah. On Sunday, we gapped above.
And we pulled back and we rallied off of that. So I think it looks good so far. I would say this could be the start of the run, as bold as that may sound.
I mean, it's a weight of the evidence thing, right? And I think we can end this week, kind of talking about this question. When you're looking at a market, at least what I do is I stack up evidence. There's a bullish, you got a scale, you put all the evidence that you get on the bullish side, and then you put the evidence on the bearish side, and you start seeing which way does the scale tip. And every day, every week, every month, we get more price information and more price action that we can then categorize. Well, is that bullish? Okay, put that on the bullish side. Is that bearish? No, put that on the bearish side. So it's this, for me, it's a constant weighing of, you're never going to get 100% certainty, because if you do, it's the move's over and it's too late. But what we're trying to do is stack the odds in our favor. And I wanted you to talk about, Barrie, your process, and is it something similar where you're stacking evidence and you're accumulating different data points to come to a conclusion?
Well, it's similar. I think we all have our unique perspective, so we have a different way we approach it. And for me, it's always, I always start with the history. I always, like when we first met, our mantra used to be like, hey, always look to the left.
That's right, look left.
And so I always look to see, how did we get here? And I think that's always a good question, no matter what you're trading. Mm-hmm. So so natural gas, for example, I would look at the highs. And then if you have time, you can glance back and say, well, how did we get to the highs? And you study that market, then you study how we came down. And then you look to see if the lows can be somehow confirmed, at least by reliable tools that we're accustomed to. So that's my first, like, once I have an idea, like, okay, this is I can confirm there's a high probability there's a low here, just from looking at the price action and the cycles. Then I just go on to the systematic side and I wait for some kind of a entry setup to the long side. Mm-hmm. So no matter, the thing is, no matter how, everybody has a different way how they stack things and what works for them. Obviously, that 10,000 hour thing is probably true. The longer you do it, the easier it becomes to sort of see the patterns and see the rhythms and see how the market is flowing. So after the first part is done, which is more like a template where you kind of try to pin down where the market might have turned, then you just lean on your system to get you into a position. And what I was trying to say earlier was that the reason you want to lean into a system is, no matter how probable you think it is, market can always do something different, right?
Take corn, for example.
Yeah, take any given market, right?
Right.
So the thing is, what you really want to be comfortable with is not the high or the low, but what's the risk you're willing to take. So I always come back down to, well, is that worth my risk? Like here, it's worth my risk. If we can hold above 265, it's worth my risk. Mm-hmm. Was it worth the risk below that, around 230 or so? No, not really. Right. Even though we think the low might be in place, it wasn't worth my risk, because I couldn't see the risk reward being fair. So you have to look at your entries and what triggers you into a trade, and look at that risk you're willing to take. And that's the only thing that's consistent, right? The risk you're willing to take is the only thing you can control. So you can't control if that's a last low, or we're going to go back and go, nat gas going down to 150. Who knows? Anything can happen. But one thing we can control is the risk. So, when we look at all these different cycles, cocoa, be coffee, whatever, that's why I wait for a certain level to be taken out. Then it tells me momentum is shifting, and then you figure out what you're willing to risk, and then you take the trade. So it's always, I think, once you figure out the basics, that's why I'm not really nitpicky about exact low, exact high, the exact, it has to hit to the tick. I think those things are nice, but that's more analytical. I think the focus should really be, how to tighten up your risk
and tactically attack the market, right? With good risk reward trades.
Yeah. And the lead up to that will help you with that, that looking to the left, figuring out the cycles, levels, and all of that feeds into that. So then you can kind of figure out your risk.
Right. In addition to the markets I highlighted on here, I think some of the things I'm going to focus on this week are the metals.
Right.
Gold on a daily basis did 45 by 45 at the low. Silver on a daily basis did 36 by 36 at the low. Those may end up not being anything or not being meaningful, or it could signify some sort of turn. Copper, as you talked about in your review, is acting much better as long as we hold above those certain levels that you highlighted. Copper could take off. So I think I'm going to focus on the metals. I'm going to watch cotton and crude like a hawk, because of these long consolidations are going to end at some point. I'm going to watch the grains. Where do these lows come in? Can we get those higher lows? Because we got a shot at catching a really fast move higher in those markets. And then, of course, as we ended the show, nat gas, which looks to be on the verge of making a fast move higher. So that's where I'm going to be focusing. What are you going to? And in addition to ES and obviously NQ, because those are at we're at a potential turning point there with major cycle that hit today. So where's your focus going to be, Barrie, this week?
Well, S&P, of course, and also watching the bonds to see what we can do here. And cocoa, it's running up. We have to figure out, where the next resistant levels are. And I think there's one coming up. We might hit it by Friday. We'll see.
Right.
Gold, yeah, kind of interesting. I want to see what's happening there. And of course, the dollar, to see if we can continue to move back higher.
Right.
We watch all of this during the week. So to highlight, I would say S&P is at a very interesting spot. So that'll probably be my main focus for now, and cocoa, and probably some of the grains we'll be watching, and nat gas for sure.
Excellent. Well, listen, everybody, have a terrific weekend. Have a great 4th of July holiday. Rest up, be ready. Know that using the levels and using a system, you can with good risk reward ratios get into this market. So just enjoy the holiday weekend, and we'll talk with you next week.
All right. Thanks, Ben. Good job.
All right, Barrie. Thank you.
We'll see everybody next week.
All right. Bye-bye.